Yesterday, the Liberal government announced that it would be trying to add 1.4 million new Canadians to the country over the next 3 years. And on the very same day, the Bank of Canada's Deputy Governor and Governor were giving testimony to the Canadian Senate. And inside of that testimony, they revealed that there's actually a convenient way that these newcomers help the Bank of Canada out of a sticky situation. So today we're going to talk about exactly what that benefit is and how the 1.4 million new Canadians could affect an already tight housing market. And of course, if you haven't already done so, make sure to subscribe to the channel. About half of the people who watch these videos aren't subscribed, and it's free, so go ahead and click that button and it helps out the channel dramatically. All right, let's get into these details.
Look, folks, it's simple to me. Canada needs more people. Canadians understand the need to continue to grow our population if we're going to meet the needs of the labor force, if we're going to rebalance a worrying demographic trend, and if we're going to continue to reunite families and to do right by the world and make good on our commitments to support some of the world's most vulnerable.
So since yesterday's announcement, obviously the question about housing has come up and how are we going to sustain all of these new people coming to Canada, and we're going to get into more details there. But first we need to talk about the potentially disastrous situation that the Bank of Canada is in right now and how all of these newcomers to Canada, how they could actually help them out of that tight jam. Now, the first information that you're going to find out here is what this Bank of Canada fear is and why they don't want it to happen.
With respect to the wage price spiral, this is something we're worried about, and you can understand why we're worried about it. Inflation is 7%, 6.9, 7%, and it's been high now for some time. And the longer it stays high, the bigger is the risk people start to expect higher inflation. And one of the and then as I indicated earlier, then competition doesn't work. It's easier for companies to pass on higher prices. What happens in a wage price spiral is, inflation goes up, and in a situation where there's excess demand in your economy, businesses are having trouble attracting workers. They raise wages. That raises their costs. They pass that on to still higher inflation. If the economy is still in demand, wages go up further, and you get this. And that is one way that expectations can de-anchored. And that's basically what happened in the 70s.
He talks a lot about a wage price spiral because that's one of the fears of the Bank of Canada, because really they don't have the tools to control that as much as they would like. Right now, the Bank of Canada essentially has one tool, and that is to raise or lower interest rates to manipulate the economy. They also have quantitative easing and tightening, which is kind of like an extension of a similar sort of power there. But they don't have the power to really address the labor market as effectively as they would like to, and that's where the wage price spiral comes in. And this all stems from a fear that inflation is going to last a lot longer than we'd like it to, and that it might become like a self-fulfilling prophecy or a loop or a spiral here. And that's how we get into the wage price spiral. Right now, when we have an economy with so much demand, we have workers that are able to get jobs rather easily in certain sectors, and we have businesses that aren't able to find workers. So as a result, what do you do if you need to find more workers? You raise the salary of those workers. Now, people are getting paid a little bit more to go to work, which sounds like a good thing, right? But when you have people that are making more money, that means that there's more money to be spent on more goods, and that will raise the cost of those goods, meaning that there's still more demand, and it makes it even more challenging for people to get more workers, so they have to pay them more, and prices tend to go up because people start making more money. This is the fear of a wage price spiral that the Bank of Canada is talking about. That's why it would be ideal for the Bank of Canada. That's why it would be great for the bank. That's why it would be great in the Bank of Canada's eyes if we had a looser labor market. We talk about labor markets being loose or tight. Tight just meaning that it's hard to get workers, and loose meaning that it's hard to get a job, right? The Bank of Canada now wants it to be looser, wants it to be harder to get a job to avoid these wage price spirals. And that's when you start to realize that, okay, maybe this boosted immigration policy is a convenient way to get out of this wage price spiral risk, because if we bring in more Canadians to fill these jobs, well, you don't have to pay Canadians more because there's enough people to fill the jobs, right? There's less of a labor shortage.
I agree. As a country, we should work on both supply and demand. The interest rates have an impact on demand. Our tools will slow down demand. And in our forecasts, we have a quite good increase in supply for two reasons. One, immigration. immigration was very weak during the pandemic. And now the government is increasing immigration rates. And they've announced once again today another increase in immigration. And so this will also increase labor.
So he's saying that the Bank of Canada can really only affect the demand side, and the provincial governments and the federal governments with their policies, including this immigration policy, well, they need to address the supply side. They need to be able to make more things, make more goods, be more productive to help out, while the Bank of Canada is trying to lower demand and make everyone feel more poor so that they spend less money, right? That's what their interest rate rising plan is, to raise interest rates so that people feel more poor. People who have any kind of debt, while interest rates rise, well, they tend to sort of more money from the economy gets sucked into that debt because they have to pay more debt, right? Think of a mortgage where you may have a variable rate loan. If interest rates go up, well, a greater percentage of your income goes into paying that mortgage instead of going into other goods and services that would add to demand. That's how they destroy demand, right? Ultimately, it's fair for them to say that inflation needs to come down. Right now, it's sitting right around 7%. The Bank of Canada wants it between 1% and 3%. And he's saying we need this to have a functioning economy, which is true. We can't have inflation running hot for so long because if we have entrenched inflation, that would be a disaster. They'd have to raise rates even more dramatically, even more quickly, and that would cause a lot of pain for a lot of Canadians. But one question on people's mind when it comes to addressing the supply side of this with things like immigration is, well, housing. Canada only makes roughly 300,000 housing units each year, and we're planning on bringing almost 500,000 new immigrants in every single year. So what's going to happen here? Sean Fraser, the Liberal MP who announced this immigration policy, has a response for that.
Enough space to house those people. We're going to amplify the housing crisis. What do you respond to that?
This is a really important question. So the starting point for me is that the cost of not welcoming newcomers at ambitious levels is extraordinary to the Canadian economy. We're dealing with a situation where we've had one of the strongest economic recoveries of any country in the world from the COVID-19 pandemic, but we've still had 1 million jobs available earlier this year, despite the fact we were at the lowest rate of unemployment. We need to bring workers here, not just to address the short-term labor needs of the market, but the long-term skills gap for the next generation. We also have a really challenging demographic problem in Canada. 50 years ago, we had 7 workers for every retiree. 10 or 15 years from now, we're going to have 2. We're not going to be talking about labor shortages 10 or 15 years from now if we don't correct this imbalance. We're going to be talking about whether we can afford to pay for schools or hospitals. So we need to look at the counterfactual as well. But on housing, this is actually one of the most important aspects of the immigration levels plan that we tabled just the other day. We have new flexibilities in the express entry system that are going to kick in 2023 that will allow us to bring the workers here to meet the needs of the sectors that have the greatest need. We spoke during the announcement yesterday about the need to bring in skilled workers specifically to welcome people who can help build more housing stock across Canada. But in addition, there was a major focus in this immigration levels plan to push people to communities that have the absorptive capacity to welcome them, including housing.
So he talks a lot about the cost of not increasing immigration being greater than the cost of increasing it. Yes, we might see in the short term housing prices suffer as a result of bringing in more Canadians when we already don't have enough places for the Canadians to live who are here now. But he says that we in the future, we won't just be worried about this housing issue. We're going to be worried about way more things if we don't bring enough new immigrants into Canada to support these larger issues like being able to afford schools, having enough workers to care for retired people, bigger societal issues. I think he said a while ago that it was a sort of 7-to-1 workers to retired people, but looking forward to 2035 that it was going to be 2 workers for every 1 retired person. So obviously there's a little bit of an imbalance there. The counter argument here is that as you bring more Canadians in, you have like a more productive economy and people making more money, but as a result the government can charge more in taxes or have a larger tax base to tax to be able to provide these sort of social safety net services that we've come to enjoy and expect here in Canada. So the argument is essentially that we need more people to support the people that are already here because there's too many people here right now for us to support them all. So we need to bring in more people to support them. But then we're going to have more people and then we need to bring more and more people over in the future. And there's that cycle. It kind of makes you think that it's like one big Ponzi scheme where you need to bring in more people to be able to support the people that are already there, where the quality of life can only maintain if we keep on growing because there's just so many people that we need to support. It's kind of wild to to think about, but it seems that the Liberal government at least thinks that this is the way we need to go in order to solve some of these larger issues. And it also comes at a time when the government needs to show that the Canadian population is being more productive. They need to show that we have a stronger GDP, because that's what they always anchor their economic expectations to, is a declining debt to GDP ratio. They say, hey, we can spend more as long as we're making more. That's what they say. And that's what Chrystia Freeland's going to say tomorrow, alongside many other things, things we haven't even heard about yet, inside of the fall economic update. And I'm going to be live right here on the channel around 3:45 p.m. Eastern. So make sure you subscribe to the channel. Like I said before, there's a lot of people who aren't subscribed who watch these videos, but make sure that you also check out the link in the description, where there's going to be a link to that video that's sort of pre-prepped for tomorrow's live stream. You can hit a notification bell there, and it'll tell you that we've gone live, and you can watch along with me as we find out just what is going to be inside of this economic update and where we are heading as a country. But with all of that said, thank you for watching. I wonder what you think about all of this. Do you think that housing is the bigger issue and bringing more people in is going to make that more challenging? Or do you sort of understand where the Liberals are coming from here, saying, hey, we need more workers, especially in these specific industries, and if we can bring them in, it's going to actually help Canada as a whole? Let me know what you think down in the comments. But with that said, thanks so much for watching, everybody. I really hope this video helped you out at least a little bit, and I'll see you next time.